Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. So Friday, AMC closes at 526, up 5.62%. APE finished at $1.78, up 1.71%, bringing the combined price of AMC and APE over $7 at $7.04, up 4.61% on a total 32.3 million shares traded. Uncle Frank was buying the YOLOs for next Friday and fortunately got out before this happened. Judge Zern dropped her decision after hours on the settlement, and morons celebrated all across YouTube. Yay! AMC dropped 25.38%. wiping out $1 billion in market cap. It got as low as $350 before finishing the day at $3.925. Meanwhile, APE, the Pounce, our preferred shares, rallied 23% to finish at $291, a stock that traded at $10 exactly 1 year ago. Yay! So let's review. The company lost over $1 billion in market cap in less than 30 minutes. Our common stock traded under its 52-week low. The company is going to spend $130 million on a case that never should have happened, in my opinion, because you shouldn't be allowed to convert the preferred into common or execute a reverse split without a separate vote for the legacy common shareholders. But Adam and his team did it anyway and squeezed it through the system. To hell with the rules. Now, the company can go forward with a plan designed by Adam Aron, the guy who hasn't bought a single share of AMC in over 5 years, but sold over $42 million of it at prices as high as 40.53. Philip Lader of Morgan Stanley, and Antara and Citi, two of our known short sellers. The best part is this plan is a short seller's wet dream. It literally has it all. The conversion of APE into AMC, millions and millions of freshly minted shares to cover with. APE goes from being a like security to an actual locate. Mass dilution as opposed to selling from time to time and under more favorable conditions, putting more downward pressure on the stock, and then a reverse split, usually reserved for companies being delisted from their exchange. This has the added benefit of helping short sellers evaporate billions of synthetic shares if they exist at all, so the plan even helps cover up criminal securities violations. Well, now you can see why our CEO would deliberately come out with bankruptcy tweets, now known as wet blankets, even when the company is setting records, to crush any AMC rally, working in lockstep with our short sellers, because he knows there's no good reason to reverse split the stock, and every penny it trades above $5 is a vote against it. For a man that sat on his hands while AMC and APE plummeted for years after he sold the majority of his stock in the 40s, now suddenly the stock price matters to Adam. We must reverse split the stock to assist Wall Street, Antara, Citi, JP Morgan, Bank of America, Goldman Sachs, and all our predatory hedge funds. That also explains this earlier tweet. In your comments, some fear that after a reverse split, short pressure could cause the price to go back down. But you neglect that it is every bit as easy to short a stock priced at 3 as it is on a stock priced at 30. A reverse split itself has nothing to do with any subsequent prices afterwards. Well, congratulations, Adam. You got the price down in the 3s. As you know, I will never tell you to buy, sell, or hold any security or cryptocurrency. This is not financial advice, and I am not a financial advisor. But here is some good news. My theory is we were never supposed to see this summer recovery season we now call Barbenheimer. This nefarious plan, actually designed by some of our short sellers, was supposed to be all buttoned up before now. The resistance front to the case delayed the plan. And now we have a very different company on our hands than we did when the plan was hatched. From Adam Aron. Yesterday, we announced Q2 2023 earnings, AMC's strongest quarter in 4 full years, record-setting. Adjusted EBITDA of $182.5 million, up 71% over Q2 of 2022, and July 2023 was the biggest revenue month in AMC's entire 103-year history. Thank you, Barbenheimer. So we are still the largest exhibitor in the world, which means if you want to bring content to a live indoor audience, you have no choice but to go through AMC. We have less competition than pre-pandemic, and we have diversified the company's business model to include retail popcorn, a merchandise website, and a branded credit card connected to our rewards program. I never said Adam wanted the company to perform poorly. I've only said that Adam never wanted a spike in the stock. Why? And that's why investor relations is so quiet about all of our good news. A spike in the stock when cost to borrow is this elevated could have morphed into a short covering event, and Adam feels if there is one, he would lose a certain percentage of the apes. They would stop supporting the stock and stop supporting the company. But now there may be a delay in actually pulling the trigger on the plan, maybe a 10-day or 2-week time window before they execute. Now, I'm sure there will be a strategic tweet or a release announcing the company's intentions, and this will be to control the stock price. But that's where things could get interesting. You see, in my opinion, the company is going to try to get ahead of a couple things that could be problematic for our enemies. For one, as of Friday, we were still on the New York Stock Exchange list of criminal activity securities for over a month. Number two, they haven't covered yet, and the FTDs have been at nightmare proportions. And here's something else interesting from Skylar Roundtree on Twitter. AMC accounts for less than 0.00025% of the total market capitalization of all publicly traded companies in the United States, while at that exact same time accounts for 10.3% of the entire industry's revenue from lending securities. Right? So that means people love to short AMC, and prime brokers and institutions love to loan them shares to do it. So not only is AMC 10% of the entire securities lending market, FTDs are through the roof, and at the time of this recording, I see only one share of AMC available to lend at a fee of 243.52%. That's a pretty explosive combination. You see, guys, if there are 3.8 million shareholders with an average of only 526 shares each, and I've seen reports that it's higher, that's 2 billion shares right there, and that's without institutions. Adam Aron has repeatedly denied the existence of synthetics and has been busy hammering FINRA and the New York Stock Exchange with phone calls about being on the threshold list, like this is something new. But we've been plagued with an FTD problem for over 2 years, which the SEC has deliberately ignored. Adam Aron himself, guys, don't believe everything you read on Twitter. Yes, it's true that we have a lot of short sellers who have sold our shares short, but all the stuff you read about market manipulation and fails to deliver and the billions of synthetic shares out there, it's not our problem. But I believe there are billions of synthetics out there, and the plan is designed to address this problem. But here's the thing that could throw a wrench into their plan. That's right, black or white swans. You can laugh at me if you like, but the swans have a way of coming around when you least expect them and at inconvenient times, and I can assure you that Credit Suisse, FTX, and Archegos don't think they're funny at all. One potential white swan I'm watching is maybe a quick resolution to the writer's strike from AP. Striking screenwriters will resume negotiations with studios on Friday. From the LA Times, WGA and AMPTP resumes talks. Hollywood holds its breath. From Reuters, Hollywood writers to evaluate counter-proposal from studios. And from The Guardian, Hollywood Writers Union mulls proposal from studios that would end the strike. And another white swan I'm excited about is what if our third quarter shapes up to be better than our explosive second quarter from only 21 hours ago? Insidious. The Red Door sets new record at the box office. From USA Today, Barbenheimer breaks box office records. Are theaters making a comeback? Movie ticket sales are crawling back to pre-pandemic levels. According to the numbers, a publicly available database of movie industry statistics, annual tickets sold for 2023 are expected to reach 922 million. That's compared to 2022, where total tickets sold reached only 709 million. While 2023 ticket sales are not expected to surpass 2019's pre-pandemic levels of 1.2 billion, they're inching closer, partially in service to the global sensation that is Barbenheimer. And there's no shortage of potential black swans in the skies. From Forbes, don't look up. Why a commercial real estate crash might be streaking towards us. Or commercial real estate's cataclysmic crash is underway, and there's now a huge class of zombie buildings, says top executive. Maybe our hedge fund friends are starting to learn that naked shorting American companies could be a bad business. Saba Capital Management, the hedge fund firm founded by Boaz Weinstein, has seen its flagship fund rack up losses of 7.7% so far this year after bearish bets backfired amid the recent stock market rally, according to the Financial Times. Or from last month, hedge funds are dumping short positions at their fastest pace since January as returns lag the MSCI and bets on a recession continued to falter, according to Reuters. This article appeared only 2 days ago in MoneyWise. The whole structure needs to tumble. Black Swan author Nassim Taleb cautions that a 2008-style crash could be coming. Here are 2 risky areas he wants investors to avoid. From the article, Black Swan events describe economic events that come as a complete surprise and have a major impact on the landscape. The next crisis, however, may be developing right under our noses. He believes the economic risks we currently face are obvious. After years of ultra-low interest rates in the United States, Americans have piled on unsustainable levels of debt. Now that interest rates are climbing, this debt is due, and some borrowers may not be able to afford repayments. Quote, "The risk is right in front of us. If you see a fragile bridge, you know it's going to collapse at some point," Taleb said. "So you need to fix it." How do you fix it? The solution, he says, is to reduce debt and take measures that are beyond cosmetic. In Taleb's view, 2 segments of the global capital markets are extremely vulnerable: real estate and new technology. And I actually appreciate this kind of shareholder activism. From Day Trader, pick your poison for the day. Just don't sit around scratching your ass. Do something. Pick up the phone and call. And he's listed the phone numbers for the SEC, FINRA, and the DTCC. Speaking only for myself and with full disclosure, I am still long AMC and will continue to buy the dips for now. I don't believe a reverse split will work, nor a QSIP change or phase 6 or any of that crap. Not in this environment. Maybe 5 years ago when we still followed the rules to some degree. I believe the shorts will remain short until they're forced to cover, and that will be by way of a white or black swan event. I would only add our enemies have a tendency to destroy themselves on a pretty regular basis, and I also believe the primes and regulators are running out of patience on this trade. It's far too big and dangerous, so I expect the manipulation in the open to continue, and I'm sure they will pull out every trick in the book, including but not limited to abusing the halt system. One thing they can't take away is we are now a profitable company. In spite of all the money management and our board have bled out of the company, even when we were closed and even during a pandemic. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.